Good afternoon, ladies and gentlemen, or good morning, good evening, depending on where you are in the world. Thank you so much for tuning in to another week of, I think, what we're going to call off the charts. Now, this is going to make a lot more sense to those of you that were tuned in to last week's session. For those of you that weren't, I would highly encourage you to go and check out that session on YouTube. It's available to play back at your own time and at your own leisure, and it will give you some context as to what we're doing in these sessions. Now, for everyone that's tuning in for the very first time, I want to play a little bit of catch up and do a very, very brief recap on who I am and what we covered in the last session. I'm hoping these are going to become a little bit more normal with every session that we do together. But in the early days, I think it's important to get these formalities out the way. First and foremost, my name is Sanjeev. I work as a performance coach and a trader. I've been working with traders for the last 5 years, almost exclusively. And I've been trading since around 2012. So it's fair to say I've had my highs and lows in the market. I've got some war wounds. I've got some experiences and stories that I want to share with you guys throughout the space of our time here today. Now, the purpose of what we're doing on these sessions, as I mentioned by the title that we're working from, we're calling these off the charts. And what I want for these sessions, and you'll notice this from the last one, and it will be the same theme in this one here today, I want these to be a little bit different to the rest of the trading education that you do. I can only presume if you're tuning into a session like this, you're someone that's invested in wanting to improve your ability to trade, you're invested in the idea of wanting to improve your performance and really operate at the highest level that you can. You want to unlock your full potential in this game. Now, what we're doing here is we're not focusing on chart work. We're focusing on the aspect of trading, which is going to help to keep you consistent, which is going to help to make you a better risk manager. And that is all about better getting to know yourself. I had a pretty rough start into my trading journey. And I talk about that experience very, very openly. It's definitely a lot easier now that I feel like I'm kind of on the other side of things now, but it made for an experience which taught me a lot about the markets. It taught me a lot about myself. And in the last few years, I've been able to share some of that knowledge, the experiences, the frameworks with many other traders. And those experiences have taught me much more about the human mind, the human body, the way we think, the way we feel, and the way we act on a day-to-day basis. So everything that you're going to be doing inside of these sessions is really about better getting to understand yourself so that you can become a more consistent trader. And for me, I think consistency is absolutely everything in this game. I'm yet to meet a trader that finds consistent results and outcomes from the market by putting in an inconsistent approach. So we're going to aim to fix that throughout each one of these sessions. And what we're going to be focusing on is a different theme, a different topic, a different idea for each conversation that we have. And I want to give you a real and raw experience and discussion as to what that's like from someone that has been through those experiences. And I want to share some tips, some tricks, some insights, some words of wisdom that you guys can take away from every single session that you can apply to your trading to help you see an improved performance going forward. Now, if you were present in last week's session, make sure you come and say hello in the chat. If it's your first time here, make sure you say hello in the chat. I am going to be keeping an eye on the conversation throughout the space of today. And if you guys do have any questions, please feel free to throw them in. And I will be doing a little bit of open Q&A, plus a very, very generous giveaway from the team at ThinkCapital right towards the end of the session. So be sure to stay tuned towards the end of the session. Now, for those of you that were present last week, the topic that we spoke about and what I introduced is I talk about this idea of before you really try and solve the problem of trading, I think it makes sense to understand why we all experience the problem. Why is it that most traders fail? And that was the topic of our first conversation together. I sat here for around an hour and I talked to you about my experiences, the experiences that I've had and gained from many of my clients, and what this has taught me about myself, human behavior, the markets in and of themselves, and ultimately how that goes on to impact your performance and the things that you can learn and take away from this. Today, I want to be expanding off of that topic because one thing, for those of you that were tuned in or for those of you that caught the recording, the one thing that you'll probably recall is one of the main things that we touched on as to one of the many reasons why traders fail is a lot of traders seem to lack an ability to actually regulate their emotions over time, right? They lack an ability to regulate their emotions. And I want you to notice that I'm not saying turning off emotions. I'm not saying controlling emotions. I'm not saying you need to operate like a robot and express no emotion whatsoever. I'm saying that everything I've learned in my experience about dealing with emotions and really mastering them, if that's maybe the correct way to put it, is all about understanding that, firstly, they impact each and every one of us. But secondly, and more importantly, the key to overcoming them is not in elimination, it's actually in regulation. And that's what we're going to be talking about today. I'm going to be talking about emotions in general, but this is going to encompass a variety of the ones that you experience, whether it's fear, whether it's greed, whether it's overconfidence, whether it's FOMO, whether it's some kind of desire or impulse that makes you lack patience or discipline in some way, shape, or form. This is all going to be encompassed as part of today's session. Now, the reality is, if you've been in this game for any longer than 5 minutes and you've placed the trade with some real money, it's likely you're going to have experienced some kind of emotion, whether it was fear, whether that was greed, frustration, revenge. They all seem to show up at some point in time. And I myself are not immune from this. Now, I'm not going to sit here and say I'm a veteran of the market and I know it all, because I most definitely don't. I, much like many of you, I'm working to just be a better trader every single day. And I'm learning new things every single day, and I'm working to improve every single day. But the one thing my experience has taught me is that the biggest mistake that most traders make when it comes to dealing with emotions is they believe that emotions are the problem. They believe that emotions are the enemy. And this is an inherent problem for everything that you do in your trading going forward. Because if you truly believe that your emotions are the enemy, then you're constantly going to war with yourself. You're going to be doing battle with your mind. You're going to be trying to fight them every time you experience them. And the reality is, you can't control emotions. I'm a decade into this game, and there are times where I take losses or I go through a period of drawdown, and it's still hard. It's still frustrating. I still get angry. I still want to impulsively jump into the market. But one of the big things that has really changed as part of my journey, and one thing that has really helped me to develop to be a more consistent trader over time, is actually understanding that I can be a consistent trader even with emotions present. The key is not in trying to fight the emotion and trying to eliminate and stop them from ever experiencing them. The key is actually understanding that I just need to develop a certain level of awareness as to when they're going to appear. And then secondly, building a framework to actually regulate those emotions so that I don't act on them. Because that's what this game is really about, right? That's the problem that we really have. And that's something that we're going to be talking about very, very shortly. But the problem isn't in the emotion. The problem is in the action. And so the first mental reframe that I want you guys to start thinking about is I want you to understand that emotions are not your enemy. The best thing that you could possibly do, and the best way you could think about this area of your trading, is to understand that emotions are not problems. They are signals of an underlying problem, right? They're a piece of data. They are the market providing you some level of feedback as to something that you need to better understand about yourself. It is the market's way of showing you exactly where you need to put your time and energy to work on developing if you want to have more consistency. This was something that I never learned at the very, very beginning. I was of the opinion that if you wanted to be successful, you had to be able to operate without emotions. And so I spent the vast majority of my first few years going to war with myself, going to war with my mind, and trying to find that way to eliminate emotion over time. I tried to become a robot, and it was a battle that I always lost, right? I tried to put myself in a position where I didn't feel any fear or I didn't feel any excitement after a winning trade. And the reality is, and I'm sure much like many of you have experienced, it didn't work. It wasn't the answer that I was looking for, because there were times, and I would tell myself on many occasions, that today I'm going to do something differently. Today I'm gonna be better. I'm gonna be more patient. I'm gonna be disciplined. I'm not gonna have all the same emotions that I normally have. And some days it would work when I was motivated and I had the willpower and I was trying to do all the right things. And some days it wasn't the case. Some days I would give in to all those impulses and I would act on fear, greed, overconfidence, and all of the common emotional killers that absolutely impact most of us, right? So, the first reframe, and I want to reiterate this at this point, is I want you to understand that emotions aren't the problem. It's your reaction to the emotion which causes a problem for your trading. And this is something that we touched on in our first session together, right? In our first session, we talked about the idea that actually, if you developed an ability to experience an emotion, but not actually act on it, you'd become a far more effective trader because it's not the emotion that kills your performance. It's the action on the emotion that kills the performance. And so today's session is really about learning how to disconnect the two. Today's session is learning to give you some insights from my experience, some tips and tricks that I use on a day-to-day basis that is going to help you to create that disconnection so that sometimes you can feel fear, you can feel greed, anger, frustration, that ability to want to take revenge, and you cannot act on it. That is a superpower in and of itself. And that is the skill that I have found most successful traders possess. It's not that they never feel emotion, it's that they've developed an ability to not act on the emotion. And that's what creates a certain level of consistency as part of their approach in the markets. Okay. Now, first things first, before we get into some practical ways to actually start to resolve and fix some of the emotions that you're experiencing, I think it makes sense to actually understand what the purpose of emotions are, right? I want you guys to start thinking about this idea that emotions are very similar to a warning light that you get on your car dashboard, right? If you were driving down the road one day and a warning light popped up on your car dash, would you ignore it? Would you pull over, turn the ignition off, go for a walk for 5 minutes, and then hope that when you come back, the emotion or the warning light is not going to be present? I presume you wouldn't, right? Most people would see a warning light in their car or their motorbike or whatever it is. They would see the warning light and they would understand that it's indicating that there is a problem beneath the surface. And maybe you would get out, maybe you would crack open the bonnet and you would try and understand what is going on beneath the surface, right? You've got an engine management light, you've got a low oil warning sign on there, you've got a tire pressure signal. They're all going to be pointing to different things, right? But the underlying fix is the same. The underlying fix is that you understand simply by turning the car off and walking away, the emotion isn't just going to magically disappear. The only way you are going to be able to resolve that warning light is that you're going to have to understand what is causing the problem and then address the underlying problem. If you never learn to do that, then the underlying issue will always be there. It will just come back at different times. It may not turn on the moment you turn on your ignition, but you drive for a few minutes. And if the underlying issue is still there, it's going to come back at some point in time. And your emotions work exactly the same way, right? Your emotions work exactly the same way. So I want you to remember when you're experiencing an emotion and you're finding it annoying or frustrating, or you feel like it's getting in the way of your consistency as part of everything that you're doing in the markets, I want you to remember that your emotions are there for a reason. They're not there to annoy you. They're not there to sabotage you. They're not there because they secretly want you to fail and this is your mind's way of self-sabotaging. Your emotions are present for a reason, and they are simply telling you that something is off. Something needs to be addressed underneath the surface for you to be able to actually move forward, right? And we can apply this to many different areas of your trading to help you to understand exactly what I'm talking about here. So for example, if one of the most common emotions that you experience is fear, maybe that is your mind's way of telling you that the position size that you are using is too big, right? The position size that you are using is too big. Maybe it's telling you that you're worried about what happens if you lose on that one particular trade. Think about what that says, right? That's not your mind trying to disrupt your performance. That is your mind trying to warn you that there is something going on beneath the surface that you need to address. Either you're doing something that you're not fully comfortable with, or you don't really have enough confidence in your plan. And as a response to that, your mind is making you feel fear so that you can fix the underlying problem. Whether that's managing a smaller amount of capital, whether that's developing more confidence in testing your data over time, but something needs to be done. Because you might be able to be disciplined, on this occasion and do all the right things in this moment, but is that a suitable fix long run? Think about it in the same context of the warning light on your dashboard. If you haven't addressed what is going on beneath the surface, then it's unlikely to just magically disappear until you deal with the underlying issue. It's no different to cutting a weed on the surface, but not actually pulling out the root. You might address it on this occasion, but I promise you, after a certain period of time, that weed will grow back up and out again, and it will probably be stronger than it ever was before because you haven't dealt with the root cause of what you are experiencing. Maybe the emotion that you experience is frustration, right? Maybe you get frustrated when things maybe just don't go your way. Maybe that's your mind telling you that actually your mental capital is depleted. You're not in the right headspace to be making the decisions that you're trying to make right now. Maybe it's because you haven't slept well the night before. Maybe it's because you're distracted by your job or your business or your children or something like this. Frustration is just another signal, right? It's just another way of telling you that something is off beneath the surface. And the same is true for everything else. Another popular one is greed, right? Maybe this is linked to the idea or a flawed belief that you believe that one trade could change your life. Because if you truly didn't believe that one trade could change your life, why would you try and fight for another 10, 20, 50, 100 pips? Really and truly, finding success in this game is all about consistency over time. If you're position sizing correctly, one trade should never wipe you out, and one trade is not going to make you an overnight millionaire. It's the yin and yang of both sides of this game. But you have to be positioned correctly from the very, very beginning. You have to have the correct belief system to understand that if you are doing things in the right way, then really you're only going to have one of three outcomes from any trade that you make. You're going to have a small loss, you're going to have a small win, or you might have a big win. As long as you can avoid ever taking a big loss, because this is what everything we are doing here is for, right? It's all centered around this idea of developing clarity of mind to make you a more consistent performer so that you can manage risk as best as you possibly can. So if you can avoid ever falling into a mindset which makes you feel like you need to risk an extraordinary amount of money or risk an amount of money that you're simply just not comfortable with, you're going to increase your chances of finding success infinitely going forward. And that's something that you really need to be aware of. Okay? So what I'm trying to say here is that instead of trying to suppress emotions, your job is to understand them. Your job is to understand and to ask yourself at every situation, what is this emotion trying to tell me? You don't need to turn them off. You don't need to fight them. You don't need to tell yourself that you've done the wrong thing because you're feeling fear or greed or FOMO. You simply need to start getting explorative, and you need to start asking yourself, what is this emotion trying to tell me? Okay. So what we discussed a little bit earlier at the start of today's session is I hinted at this idea that the problem isn't necessarily the emotion. The problem is often just the action that you take in response to the emotion, right? Most traders fall into this trap by constantly thinking, I need to control my emotions. I need to do something differently. And if I can't do something differently, then there's a fundamental problem. I can't be successful. And it's just not true. Everyone that I have been fortunate enough to meet that does well in the markets in today's day and age, and this includes myself, we all still experience emotions. We all still get angry or frustrated when we lose. We all don't like going through periods of drawdown. These are all normal things, right? Money is an important part of surviving in this day and age. And when you lose it, it hurts, right? I'm not telling you that you can't make these emotions easier to deal with, but I'm saying to think about this game in a way where you believe at some point in time emotions are simply going to disappear is probably not an objective that you want to work towards. Because the honest reality is, emotions are a beautiful part of the human experience. Being able to feel joy and excitement and actually the sadness, right? Being able to experience the full extremes of either end is an important part of being a human being, right? The highs won't feel as high if you've never had a low, right? For people that were born into money and wealth and have never experienced struggling for money, do you think they're going to appreciate the finer things in life the same way somebody else would that's had to struggle and work their entire life for money? It's probably going to be a very different experience, right? So these are all part of the human experience. Nothing is ever going to eliminate them. And if you can agree with that sentiment and that idea, then you have to accept that the thought process that most traders go down is flawed, right? The thought process that most traders take on, this idea that I'm going to be able to turn off emotions at some point in time. If I just learn enough or I figure out the holy grail of analyzing the market, then I'm never going to take a loss, and therefore I'm never going to have to experience that negative emotion again. I promise you this, a decade in the markets, I've been fortunate enough to connect with and speak with hundreds of traders over the last few years, and I haven't met a single successful one that has been able to do a good job in completely turning off emotions, right? So what I want you guys to start thinking about today is how you can start doing things a little bit differently to most people. Because the reality is, this is not something that's hardwired into us. The problem is not that you lose and you experience an emotion. The problem for most people is that you haven't been taught how to lose. You haven't been taught how to win. You haven't been taught how to do either of these things and regulate your mind in a way that keeps you at a balanced playing field. And I like to call that point in time emotional equilibrium, right? It's a complete balance. The highs don't make you feel too high and the lows don't make you feel too low. And only when you're in that state does it become a little bit easier to start doing and focusing on remaining consistent as part of your approach to the markets. Okay. So I want you to keep this in mind. Emotions are not problems. They are usually just symptoms of a deeper underlying problem. And those deeper underlying problems can range from a variety of different things. It could be from poor risk management. It could be from an actual lack of patience in the market and not understanding that this is not a job. You don't get paid to sit at your screens from 9 to 5 each and every single day, right? Maybe it's you not understanding that your decision-making ability is done for the day, because your decision-making ability really operates like a battery. You don't have an infinite supply of it to make good decisions. From the moment you wake up, every decision that you make carries a cost, right? Every decision is like ticking off a battery percentage on your phone. Have you ever tried to use it? For those of you that have a smartphone, I have an iPhone, and one thing that I understand very, very clearly is that when my phone gets down to low battery, sub 20%, sub 10%, on that final 1%, my phone gets sluggish. It doesn't operate in the way that it should. And that causes it to, operate in a way that's suboptimal. Your mind works exactly the same. And imagine bringing that mind with you to the markets to make decisions, and not just any decisions, important ones that are all linked with money, your ability to succeed. They're closely tied with your ambition for what you want to achieve in the future. A lot of people attach their self-worth to their performance in the markets. And again, you're kind of just setting yourself up for failure at some point in time, right? Some people truly believe, and again, I say this not from a place of ignorance. I say this because I was very, very guilty of experiencing this. I felt like the market owed me something. I felt like the market owed me something. Some of you will hear that and you'll think that sounds crazy, right? You'll think that sounds silly. Some of you will hear that and maybe it will strike a chord inside of you. It will make you understand that actually you're experiencing much of the same thing. I felt like the market owed me something because I had been at this game for so long, but not seen the success that I was looking for. Right? At the start of my journey, it took me 6 years just to stop losing money. Forget becoming profitable. It took me 6 years to just stop losing money. And then I went into a stage where I was breaking even for a period of time. And I believed, because the world teaches us this idea that if you dedicate yourself, if you work really hard, if you invest your time into something, if you make some sacrifices, then you will be rewarded. So I thought, I've put in all this time, I've put in all this energy, I've done so much. The market owes me success. The reality is, it never worked that way. Until I started understanding what my underlying problems were and I started to address the underlying issues, the market never gave me what I was looking for, right? The market never gave me what I was looking for. And so what I want you guys to take away from this, and really what I'm trying to instill here, is that you don't fix emotions by trying to fight them or trying to calm them down. You fix them by looking beneath the surface. You fix them by doing the inner work. And that's what most people neglect, right? Think about this for a second. How much of your time as a developing trader do you spend at the charts, right? How much of your time do you sit there and you go over various different ways of analyzing the market, trying to understand what you did wrong, or you're looking at the next new course or strategy that you can start learning that you believe will give you the missing piece to the puzzle? In reality, what's causing you to be inconsistent is often not something that's external. It's internal. It comes from within, right? Until you address why the emotion is there to begin with, you're never going to find the consistency that you're looking for. Because the reality is, there are hundreds, maybe thousands of ways, possibly an infinite number of ways that you could trade the market successfully. And if you don't believe me, do some research. Read things like Market Wizards, right? Market Wizards is a prime example. It's an interview with some of the best traders of our generation. And they all have different philosophies about how they go about approaching the markets. There are some people there that only trade from a technical perspective. There are some people that will only trade from a fundamental perspective. And then you get some people that blend a little bit of both, right? Your job as a trader is really to understand what is causing you to be inconsistent. There is no black and white answer that applies to everyone, right? Everyone experiences emotions for a variety of different reasons, and how you should fix that really depends on you as the person. So in order to become more consistent, in order to figure out how to actually resolve these problems, it all starts by asking yourself, why does the emotion actually exist? If you can never answer that question, then actually finding consistency becomes very, very difficult. Okay, so your journey to emotional mastery, it starts from the point where you stop understanding or stop trying to fight your mind and start understanding that the key to consistency is about learning to work with your mind, about learning to understand that your mind is simply communicating to you each and every day, every time you experience an emotion, that there is something going on beneath the surface that needs to be addressed. And it is your job to figure out what that is. Okay. Let me catch up with the chat very briefly. I know there's been a fair few comments from you guys that are following along, which I really, really appreciate. Haydar Boy Trader says, many people focus on the money. They don't think about the losses, and that's why many of us lose. Again, I would completely agree with that, right? The problem is, if you only focus on P&L, you're in for an emotional roller coaster with your trading, because you don't have any control over specific outcomes, right? Umo says, nice book, sir. Yeah, 100%, right? Market Wizards, for those of you that haven't read it, fantastic book. If you want to add to that, Umo says, please, the name of the book, Market Wizards, right? Market Wizards. I'll throw it in the chat for you guys. Right? Market Wizards. So as something that you want to keep an eye on, right? It's going to teach you everything that you need to understand about the markets, because understanding that there is no single one way to find success is truly the way that you need to get. It's the path that you need to be on to actually succeed in the long run. Okay. So as we move on to the meat of today's conversation, I want to give you some really practical things that you can start doing right off the back of this session that is going to teach you some things that you can do to better regulate your emotions, right? Like I said, this is not about eliminating them. This is about regulating them. Now, when it comes to regulating emotions, there is a variety of things that you can do, some of which I want to share with you here today, but they're going to be framed in two different ways, right? The problem that most people have when it comes to dealing with emotions is they only focus on one of these ways. And I would argue it's probably not the most effective one, right? When it comes to dealing with emotions, you have two options in terms of how you deal with it. You can either be proactive, and you could create a plan of how you want to deal with emotions and start doing things before the emotion arises, or you can be reactive. And the reactive side is where you wait for the emotion to arise and then you start doing things to start tackling it. Now, both are very, very effective, but I would argue that you need to be able to target both of these things, right? You need to focus on the proactive side so that you can be prepared for what emotions you're going to experience. And then you also need to focus on the reactive side. And the reactive side is going to tell you, that's kind of like your last line of defense, right? Your last line of defense to help you to understand this is what's going to happen if everything else has failed, but I'm still experiencing an emotion. The problem that most people have is they only focus on the reactive side. And this is where most people walk away. This is where most people go on and they just try and sit and they meditate. This is where most people try and distract themselves by going for a walk or taking their kids out or walking their dogs or something like this, right? Again, they can all be very, very effective forms. And I'm going to talk about some very effective ways that you can have a reactionary approach. But I don't think it's the thing that you should prioritize from the very, very beginning. So I want to start off and I want to talk to you guys about having a more proactive approach, right? A more proactive approach from the very, very beginning. Now, for me, a proactive approach means that you have anticipated that you're going to experience an emotion. Here's a question for you guys to think about for a second. How can you anticipate that you're going to experience an emotion before it appears? I'm not talking about predicting the future. I'm not talking about just making things up. I'm talking about the idea of how can you start to understand that you're likely to experience an emotion before it actually takes place. The key is you have to be keeping a trade journal, right? You have to be keeping a journal that documents not just the trades that you take, but the emotions that you experience and the rationale behind those decisions when you are taking those actions in the markets. Because what you're going to find is if you're keeping a good trade journal and you're documenting the trades that you're taking and the thought process behind them and the emotions that you experience along the way, you will start to understand that every single human being is largely just a creature of habit, right? We tend to do things on repeat. We tend to think the same thoughts. We tend to experience the same emotions, and they all tend to happen in a repetitive cycle. The problem is most of you don't understand what your emotional patterns are. And without the awareness or indication as to what those patterns are, it becomes very, very difficult to figure out when to anticipate certain emotions. If you're keeping a good trading journal, revenge trading doesn't appear from nowhere. You will start to understand that you regularly start to revenge trade after you've had a losing trade or after you've lost a certain amount of money on a particular day or a particular week, right? That's really, really important information. You might start to understand that, hey, I only feel this impulse to overtrade only when I get to a stage whereby I haven't taken a trade in 24 hours. And then that is your journal showing you that actually what you're really experiencing is a symptom of boredom. Your mind is trying to create opportunities where it does not exist. But it is impossible to start to understand these patterns of behavior without a good quality journal. So there was a question from Umo in the chat, and Umo says, do you use a journal? And I'm hoping this has answered your question. A journal should be the absolute forefront of everything that we do. Without a journal, you don't have any data. And without any data, it's hard to improve over time. You can't improve what you're not measuring. And so without that journal, without understanding the thought process, the decision-making rationale, the emotions that you're experiencing, how will you ever be able to look back on something that happened 6 months ago and understand this is the reason why I did it? Journaling is the holy grail. Those of you that are jumping from one strategy to another, you're missing the point, right? Everything that you need to know about you as a person and your approach to the market can be found in the quality of your journals. And so this is your sign. This is a big takeaway for today. If you are not keeping a journal that doesn't just document the trades that you're taking, but also the rationale behind the trade, you're doing yourself a disservice, right? You're doing yourself a disservice by not keeping that data, because that is going to be the clearest and most linear path to figuring out what you need to be doing in the long run to get to where you want to be. Overcoming those hurdles, finding consistent profitability is all locked in the details of your journal. Okay, so that's step one. That's step one to taking a proactive approach. Your journal is going to connect the dots between your patterns of behavior, right? Your journal is going to help you to understand this is why I think the way I think. This is why I have all of these bad habits. And this is when they usually tend to show up. That allows you to map out a plan to say, actually, when I take a loss, before I feel the urge to revenge trade, but after I take a loss, there is time in between. And in that time, I can start doing something different. I can either start thinking differently, I can start acting differently, but both of those are going to help me to interrupt this pattern of behavior, which seems to be holding me back as part of everything that I am doing. Okay, so that's part one of a proactive approach. You have to keep a well and good documented journal as part of everything that you are doing going forward. Okay, now the second part to having a good proactive approach, I believe, is all about the power and quality of your mind in the long run, right? The power and quality of your mind in the long run. And what I mean by that is you have a superhuman ability. Every single one of us has a superhuman ability. But the problem is most of us don't use it. Most of us don't use this ability on a day-to-day and a week-by-week basis. But it has the ability to absolutely change your life. That ability is the power of your perception, right? The power of your perception. How you perceive things happening in the world and every aspect of life will have a massive influence over how you choose to think, feel, and act going forward, right? Two things can happen to us. Me and one of you from the chat, the exact same event could happen. I could look at it as a positive. You could look at it as a negative. Why is that? It's the exact same event, but our perception towards that event is very, very different. And if we choose and if we develop an ability to see things differently, we are going to learn the ability to actually be able to flip our perspective. And actually, we can see maybe losses as a good thing, maybe periods of drawdown as a good thing. Maybe we're going to understand that a string of winning trades could actually be a bad thing if it constantly leads to overconfidence. But it all starts from the power of your perception. And I want to share with you a very small story about something that I read many, many years ago, and it completely changed my whole perception of the world, right? For me, it was a really, really powerful story. I'm hoping it's going to be the exact same for you guys because it's going to help you to understand that your perception is absolutely everything in life. You can apply this to every area of life, trading included. Okay? So, this story is about a Chinese farmer who had a horse, and it documents, or it kind of tells this story about an event that occurred over a period of time, right? I'm going to read you this story word for word. I don't want to butcher it in any way, shape, or form. So I'm going to read it for you word for word. I want you to hear me out. Stick with me. It's going to take me no longer than probably 60 seconds to tell you this, but it's going to completely transform your perspective forever going forward. Okay? Once upon a time, there was a Chinese farmer whose horse ran away. That evening, all of his neighbors came around to commiserate. They said, "We're really sorry to hear that your horse has run away. It's so unfortunate." And the farmer turned around and he said to his neighbors, "Maybe." The next day, the wild horse came back and it brought with it 7 other wild horses. And in that evening, all of the neighbors came back around and they said, "Wow, that's so lucky. What a great turn of events. You now have 8 horses instead of just 1. And the farmer again turned around and he said, "Maybe." The following day, his son tried to break in one of the horses. And whilst he was riding that horse, he was thrown from it and he broke his leg. And again, the neighbors came around at the end of the day and they said, "That's too bad." And the farmer turned around and he said, "Maybe." The next day, conscription officers came around to conscript people into the army. And they looked at the farmer's son and they rejected him because he had a broken leg. And all of the neighbors came around that evening and they said, "Wow, that's so lucky. Isn't that great? Your son didn't have to go to the army." And again, the farmer turned around and he said, "Maybe." Right? Now, the moral of the story is that it's impossible to tell whether anything that happens is good or bad. In the moment, it's impossible to tell whether anything that happens is good or bad, because in the moment, you never truly know what is going to be the consequence of good things, and you never truly know what's going to be the consequence of bad things that happen, right? If you never truly know the consequence of misfortune or good fortune, how do you know whether something is good or bad, right? So this story of the Chinese farmer who constantly turns around and he responds maybe, it carries a lot of power as to how we perceive everything in this world. Everything in the way that everything that happens to you, everything in the way that you think about it, everything in the way that you react about it, it is completely your choice as to how you want to respond, right? So I want you guys to understand that you can take this philosophy and you can start to apply this to your trading. Right? If you take a loss in your trading and you start feeling bad or a negative, I want you to question that. I want you to ask yourself, is it really a bad thing? Or on the flip side, let's say you take a win in your trading. I want you to take the flip side and I want you to ask yourself, is it really a good thing? Right? It is, again, much like the story, it's impossible to know in the moment whether something is good or bad, because you never really know what the outcome is going to be in the grand scheme of things. Because ultimately, you could take a loss and it could teach you discipline. It could teach you something important that you needed to understand for you to find your path to consistency. If you celebrate a win without truly understanding what it may lead to, is you fall into a trap of potentially feeling overconfident in your approach. And that's also something that you want to be keeping in mind, right? So the moral of this story is that you never really know which outcome is going to be the blessing until time passes. So if there is always 2 potential outcomes that could be experienced, there could be a good outcome attached to it, there could be a bad outcome attached to it, regardless of what happens in the moment. It's your job to remind yourself that any outcome is possible and that it's impossible to know what is the right thing to feel in this moment without the perspective of time. Remember, a loss can teach you discipline and a win can fuel overconfidence. So maybe a loss is not really a bad thing. Maybe a win is not really a good thing, right? This is why I always say, and this is why I want to start this section by talking about this idea that emotional mastery really starts from managing your expectations, right? Emotional mastery starts from this idea that you have the power and the ability to change how you perceive anything happening in the world. Because if every time you took a setback in the markets, if every time something went against you, you turned around and you said, actually, where's the lesson in this? What can I learn from this? What can I take from this to make me a better person, a better trader, a better thinker in the long run? If you never learn to answer that question, you'll always be stuck with one perspective. And the reality is, it might not be the right perspective. That's something that you guys need to be able to keep in mind. And the more and more you can question each of those thoughts that you're experiencing in the moment, it gives you an ability to start doing something differently, right? And that's a really, really important part of this game. Okay. So moving on from this, I want you guys to start to reflect. Now that you understand or you have a clearer idea that it's completely possible to change your perception around anything that happens in life, I want you to start thinking about the quality of your mindset, right? I want you to start thinking about what happens when you take a trade. What do you actually expect in your mind? Are you expecting an immediate winner? Are you expecting that trade to lose? Because every expectation that you have that's based on a perception of the market, it's going to shape everything that happens going forward. It's going to shape the thoughts, it's going to shape the emotions, and then subsequently, it's going to shape your actions going forward. So if your expectations are not best aligned with the probabilistic nature of the market, you're always going to struggle to do the right things going forward. Okay? Now, that's the proactive side of things. In my opinion, this is the side that most people don't put enough emphasis on. It's the journaling, it's the data collection, it's developing a mindset that allows you to see different perspectives. Unless you have that foundation, only having a reactionary approach is much, much more difficult to fix many of your problems. Now, I'm not suggesting to have a completely proactive approach and to ignore the reactive side. And I'm also not suggesting you do the opposite either. I'm not suggesting that you have only a reactive approach and you forget the proactive side. For me, mastering your emotions is best built with a two-found approach. One that encompasses the short-term, the proactive approach, right? And you can anticipate things that are going to happen in the short term. And then one is the reactive side. And there are things that you can do in the moment when you start to feel the emotions that are going to help you to rebalance exactly what you are saying, what you are thinking in that moment, right? I want to talk to you guys about 3 things that I do on a day-to-day and week-by-week basis when I feel like I am experiencing an emotion that is not going to be helpful, right? There are 3 specific things that I do that help me to understand that the short-term emotions that I'm experiencing are not necessarily reflective of long-term actions. Okay? So when your emotions hit the hardest, when you're really struggling with FOMO or fear or greed or whatever it is, the first thing you need to be doing is start understanding that it is time to bring out these reactive tools that you have ready, right? You have them mapped out, you have them ready for whenever you feel an emotion. Okay? These are the reactive tools. These are the things that you incorporate once you start feeling an emotion. They're the ones that are going to help you to respond in the moment instead of reacting to whatever your impulses are telling you at the time. Okay? The first thing that I like to do when I experience an unhelpful emotion is I journal, right? I want to write down what happened. I want to write down what did I feel. I want to write down what actually triggered the emotion, right? And then I want to ask myself, and I want to start challenging things. Is this feeling true, or is this just a story that my mind is telling me? Is this emotion actually true, or is it just a story that my mind is telling me? Because there are going to be multiple occasions where your mind is telling you to act on something impulsive. And by not understanding the consequences of acting on that impulse, you're always going to have, again, that inconsistent approach in the long run. So I think the first step is to work on your journaling ability, and it's to ask yourself, what happened? What did I feel? And what triggered the emotion, right? Why does the emotion actually exist? The more you can start digging beneath the surface, the better you're going to get at understanding how you can change how you respond to that situation. Okay? The second thing that I like to do in that situation is I like to practice breath work. Now, some of you may have practiced or had some experience at using different breathwork techniques. They can be very, very powerful if applied the right way, right? There is a very, very simple technique that I like to use, but it's very, very powerful, and it's called box breathing. If there are any of you in the chat that have ever tried or experienced or messed around with box breathing at any one point in time, please let me know in the chat. It'd be very, very interesting to see how many people have dabbled with this at some point in the past. But I want to give you a very brief understanding of what box breathing is, and I'll give you a very quick demonstration that you can take away. But the best thing you could possibly do, in all honesty, jump onto YouTube and put in guided box breathing. And there are countless videos that will take you through the entire process. And it's an exercise that you can do in 1, 2, 3, 5 minutes of your day. It can help you to develop a much greater perspective. It's going to bring you back to the present moment. And it's going to help you to make good quality decisions next, because you are now focused on the situation for what it is and not what you wish that it could be. Okay? So box breathing in a nutshell comprises of 4 stages. Okay? 4 stages to box breathing. And as you can see, I'm drawing out here, they are mapped out exactly like a box, right? Box breathing starts off by inhaling for 4 seconds. So breathing in, then holding your breath for 4 seconds, then exhaling for 4 seconds, and then holding on the exhale for 4 seconds. That's one round. That's one round of box breathing, and that's it. That's all you need to do a one single round of box breathing. Now, the idea is that you would repeat this probably for somewhere between maybe 15 to 20 rounds. As you can see, each round does not take you long. If you're doing it in perfect synchronicity, within 20 seconds or so, you should be able to do one round of box breathing. I would encourage somewhere in the ballpark of at least 10 to 20 rounds of box breathing, and then see how you feel going forward. Now, box breathing is important because it literally acts as a reset for your nervous system. This is one that I often use a lot. If I feel myself feeling overwhelmed by emotions in any way, shape, or form, then I'm going to remind myself that I have the ability to do this box breathing, right? It's going to help bring my body and my mind back into an alignment. Because what often happens is your mind gets carried away. Your mind gets focused on, all the anxiety of everything in the future, or it gets depressed thinking about all the things of the past. But when you truly live in the present moment, there's nothing to do. There's no real overwhelming emotions, because in the present moment is where you accept the situation again for what it is and not what you wish it could be. So box breathing, take it away, try it out. I promise you, it will have a drastic impact on your ability to be consistent in the long run. 4 seconds, take a deep breath in, 4 seconds hold, 4 seconds exhale, and 4 seconds hold on the exhale, repeat. 10, 15, 20 times, and you'll find it's a very, very quick way to reset. Okay? The last thing I find myself doing in the moment, right, when I'm experiencing an emotion that I don't want to feel, my job, very similar to what we did as part of the proactive exercise, you can also use this as a reactive exercise. And what you are aiming to do here is to flip your perspective, right? Anytime something negative happens to me, I'm asking myself, how could this situation be worse? Right? When something negative happens, I'm asking myself, how could this situation be worse? Or I'm asking myself, how could this situation be lucky for me in 6 months' time? Right? Think about those dynamics for a second. How could this situation be worse? Or how could this situation be lucky for me in 6 months' time? What you're essentially doing here is you're changing your perspective to focus on something more positive. When you're thinking of something worse, you can then be grateful that your situation is not as bad as you'd hoped it was. Right? When you're thinking of something worse, you can then be grateful that your situation is not as bad as you thought it once was. When you're asking yourself how it could be lucky, you're extracting a lesson. You're understanding that your perception of this will change over time. And that's what's going to help you to develop the consistency that you're looking for in the long run, right? How could this be lucky for me? You're looking for a lesson, okay? The last thing that I ask myself to shift my perspective is I tell myself, how would a professional trader react in this situation? Would they go on tilt? Would they act on FOMO? Would they be impatient? Would they be frustrated and revenge trade after a loss? The professionals, the people that you are looking up to, they don't do that. They are not doing that. Okay? So everyone that you need to focus on and everything that you're doing going forward is you need to understand that you have the ability to shift your perspective simply by asking yourself better questions. That is my personal three-phased approach at dealing with emotions in a reactive way, right? I make sure that I'm journaling and I'm challenging the emotion. I bring on board my breath work to help me to understand what I should be thinking and feeling and focusing on the present moment. And then lastly, I focus on shifting my perspective. The three of those things make up my reactive approach so that if my work on the proactive side, if managing my expectations hasn't gone as well as I would have hoped, I'm going to find that I have a toolbox of reactive things that I could pick up to help manage my emotions to ensure that I'm not doing something silly. I'm not doing something that I don't really want to be doing. Okay. And that's a very, very important part of this game. Okay. Now, before we wind down this session and we move on to a little bit of Q&A, and we also focus on the giveaway of today's session as well. I want to summarize a lot of what we talked about today. Some key points that I think are going to be helpful for you guys, and as well as leaving you with a thought-provoking exercise to get you to take away to focus on in your specific trading going forward. Okay? So, big takeaways from today. You cannot eliminate emotions entirely. You're always going to experience them at some point in time. You cannot eliminate emotions entirely. You can only understand them. You can be better prepared for them and you can manage those reactions, but you can't ever rely on the fact that you're going to eliminate them entirely. They are a part of being human, right? So trying to eliminate them is just a losing battle. Every emotional spike that you experience, fear, greed, frustration, if you don't take the steps to regulate it, to be aware of it, and to figure out what you need to do differently going forward, then you're missing an invitation to develop yourself. You're missing an invitation to grow as a person, as a trader, as a thinker, right? Every emotion that you experience, it's feedback, it's data, it's a symptom of an underlying issue. And it's a reflection of maybe your belief system, maybe it's a reflection of your process, or maybe it's a reflection of your risk appetite, right? And these are things that not enough people stop to consider. Emotions are not the problem. They are a symptom of an underlying problem, okay? And that's something that you want to keep in mind. Now, the underlying essence of what today's conversation has really been about is helping you guys to understand that the traders who find consistency as part of what they do, they don't learn to trade without emotion. They just stop letting actions determine what needs to happen. Sorry, they stop letting their feelings determine what actions occur next. Just because you feel FOMO, it doesn't mean that you have to act on FOMO. Just because you feel fear, it doesn't mean that you have to act on fear, right? These are all things that can be disconnected. And you have to understand exactly how to do that in your mind by having this protocol, by having these mental reframing exercises, because without them, you're going to be left to your impulses. And 9 times out of 10, your impulses are going to win. So the next time you feel an emotion, whether it's later today, whether it's trading tomorrow, whether it's at some point this week, the next time you feel that emotional pull, I want you to pause. I don't want you to fight it. I want you to understand it, because that's where the growth is going to happen. So your exercise for this week is I want you to get very, very clear on understanding, number one, what emotions are you struggling with, right? Number one is, what emotions are you struggling with? Number two is, what is triggering those emotions, right? What is triggering those emotions? Number three, what do you find is actually causing the emotion? What's going on beneath the surface, right? Number four, how are you reacting to it currently? And then number five, based on what we discussed today, what proactive or reactive things are you going to do to help break that cycle of behavior? Okay. So one, what emotions are you struggling with? Number two, what is triggering the emotion? Number three, what is causing the emotion? The triggers and the cause are not always the same thing, right? The trigger might be, I've taken a losing trade. The cause might be, I'm not comfortable with the amount of money that I lost in that trade. Two very different things, right? Point number four, how are you reacting currently? And point number five, what reactive or proactive steps are you going to put in place to help interrupt that pattern of behavior? Okay, very, very important exercise, but I promise you, it will completely start to transform the way that you are thinking about trading and your emotions as part of that process going forward. Okay, that is a wrap for today's session. Okay, thank you guys so much for tuning in. I hope that's been valuable for you guys, and there have been some really big takeaway points from that session today. Before we wrap up, I do want to handle a couple of things. First and foremost was the Q&A session. So if there are any questions that you guys have that you would like to throw my way, I am more than happy to stay on for a few minutes, 5, 10, 15, 20 minutes, whatever it is. But if you guys do have questions that of, maybe things that you're struggling with, things that you want to improve on, if there are things that you want to change about your approach in the markets, but you don't really know where to start, I want to hang on for a few minutes to address any questions in the comments. So if you guys do have a question, please throw it out. I'm going to leave 1 to 2 minutes just to make sure that we've got everything through. And if there are no questions, or if there's no further questions after I answered a few, we will be getting on to the giveaway for today's session. So please throw in any questions that you have. I will be on watching the chat to answer any of the questions that you have. Otherwise, we are going to move on to the giveaway portion of today's call, and we're going to be giving away 3 accounts courtesy of ThinkCapital, right? We've got 3 $10,000 challenges up to be given away on today's call. Right, let me catch up on the chat. Haydar Boy Trader says, sometimes I'm surprised how professional they master their emotions. Many of them aren't used to emotions. They're also, they always won. I'll reach this time, God willing. Haydar, keep working on it, my friend. I promise you, you apply some of the principles that we've talked about today, you're going to start to see a significant improvement in your performance. Umo says, what's your trading strategy and how did you develop them? A lot of it was a little bit of trial and error, but the 2 core components that go into my trading strategy are largely support and resistance and supply and demand. That's it. I keep it very, very simple. There's nothing complex behind my approach to the markets. I like to keep it as simple as possible. Justy has also asked a similar question. What strategy do you use? Yeah, so same sort of thing. I use support and resistance and supply and demand to help determine bias and direction. And then I have a very simple entry criteria that gets me in and out of a trade going forward. Thank you for your helpful insights. Vabav says, I'm very stressed currently, like ADHD. What should I do? Vabav, I've got an interesting exercise for you. Okay. What I'd like you to do off the back of this session, I want you to sit down with a pen and paper and I want you to make a list of everything that is stressing you out. However big, however small, it doesn't matter. I want you to make a list of everything that you're feeling really, really stressed out about. Okay. That list might be one thing, it might be 5 things, it might be 10 things, it might be 50 things, right? But write down as many of them as you can that of something that's playing in your mind that's causing you a certain level of stress. Once you have a full list of those, I want you to go through that list and I want you to cross off anything that you don't have control over. So for example, if you're stressed out that you haven't made money this month so far, cross it off because you don't have control over how much money you make. You could do everything you can to stick to your plan, but you can't control how much money you make, right? If you're feeling stressed out that your boss at work is not being a very nice person, cross it off. You can't control your boss's actions. You can control how you respond, but you can't control how your boss actually acts, right? If there is anything outside of your control, cross it off. What you're going to be left with is a variety of things that actually stress you out. And they are things that you actually have control over. Now, based on the things that you have control over, I want you to sit down and I want you to ask yourself, what is one thing I could do tomorrow to either resolve this problem or make an impact to change what I'm experiencing, right? What's one thing that I could do tomorrow to either resolve this problem or to make an impact on, changing how this situation is coming about? And whenever you feel like that there's nothing you could do in a particular situation, I want you to remind yourself that you can always change how you respond. That's always within your control, right? So think about that for a second. Once you have that documented out, you have an action plan for tomorrow. Pick one of the things that is causing you the most amount of stress and work on that path of resolution for tomorrow, right? Again, in a very small nutshell, if you're feeling stressed out, and this is not just for, who was it that asked? Vabav. This is not just for Vabav, right? This is for anybody that's feeling stressed out and overwhelmed. Write down everything that you're experiencing that's stressing you out. Cross off everything that you can't control. The things that you can control, decide on one small thing that you could do tomorrow to either resolve that problem entirely or to at least make an impact in terms of changing it. And if you feel like you can't change anything, remember, you can always change yourself. You can always change how you respond. You can always change how you think about a situation. Okay? Vabav, I hope that helps. Hope that gives you something to focus on. Umo says, what's your biggest lesson you have learned from trading and what advice would you give? Umo, that's a good question. If I had to summarize it down to one thing, again, we've focused maybe just on one specific lesson here. It's that the markets are uncertain and my only job is to manage risk. If I could put it in one sentence to summarize a decade's worth of pain and lessons, the markets are uncertain and my only job is to manage risk, right? There's nothing that I can do that is ever going to change the uncertainty of the market. It doesn't matter how much knowledge I have, how much experience I have, the outcome of the next trade is always unknown. And the only thing that I should focus on going forward is just being the best risk manager that I can be. So Uma, I hope that answers your question. 20 says, have you ever doubted yourself? So many times. 20s, I wish I counted or I kept count of the amount of times that it happened. In my first 6 years, when I lost money year after year after year, I wanted to throw in the towel many times. And so, yeah, for much of those times, I really doubted myself. And what helped me fix a lot of my doubts was really giving myself proof that my approach to the markets can work as long as I can manage my psychology. And I did that with data. I did that with back testing. The both of those together it really dispels any doubt, because it shows you that as long as you have an ability to do all the right things internally and be consistent with your approach, then making money should just be a byproduct of following your plan. Okay, hope that answers your question, 20s. Vapav says, what's risk management if we are in a losing streak? Vapav, this is going to really depend on you as the trader, right? There are some people that choose to manage risk in the way that they scale back. If they're going through consecutive losses, they scale back and they half their risk, or they drop it down to 0.25%. It's completely dependent on you as the person. You have to decide what works best for your strategy and what works best for your psychology, because it's going to have an impact on both, right? If you choose to drop your risk, you're going to limit the bleed, which is always a good thing, right? You're going to stop yourself losing as much money during that period of time, but then also coming back out of that drawdown is also going to be somewhat slower. You also have the ability to understand that you can stop trading for a period of time, right? You can keep your risk at its normal level, but if you determine that you're doing everything right and market conditions are simply just not in your favor, you have the ability to just walk away, right? Not exposing and deploying capital into the market when your edge is not really present is a big part of your edge, right? I have this philosophy that a good trading plan tells you when to get into the market. A great trading plan tells you when to stay out. So I would develop a protocol for both of those things. If you are going through a period where you're in a losing streak, determine what's best strategically, determine what's best for your psychology, and have a protocol ready that you can work on. Whether that's scaling back risk, whether that's understanding if it's the right time to walk away. But really and truly, Vaibhav, the main question you want to answer is, why are you losing? Are you losing because you're not being consistent with your plan? Or are you losing because your strategy is just not working in these market conditions? That should probably be a prerequisite to everything that we're talking about here, right? If you're not in the right headspace and you're not being consistent in your execution, your approach is fundamentally flawed to begin with. In which case, I would recommend just walk away for a period of time and come back when you're at a place of balance again. Okay. If you find that you're doing all the right things, but your strategy just isn't working in these conditions, then I would say, yeah, maybe there's a case that you could say to scale back risk, and that would really help to slow the bleed during this time until your edge starts to play out again. So hope that helps. Haydar Boy says, my final question, what I'll do if I do first payout, sir? I need your advice. I'm presuming I'm answering this correctly. Are you asking what should you do when you get your first payout? If that's the case, then my recommendation is always a couple of things. Reinvest some back into the business of trading, meaning take a portion of that and reinvest it back into acquiring more capital. And then secondly, withdraw the rest and do things that you need to for your life. But I think spending it all on things that are not really going to serve you well in the long run is not probably that helpful in the grand scheme of things. So I would personally reinvest a portion and then withdraw some, maybe use it to fund a personal account that you can trade on the side of your prop firm capital as well. Mon says, how do you break through as a break-even trader? Great question. Mon, I would ask you, firstly, to understand why you are breaking even, right? What's stopping you from finding actual consistency in the long run? Is it that your edge actually doesn't make any money? Because that's an important thing to be aware of, right? You have to really understand why you're struggling to break through this barrier of breaking even. If you're finding that actually you're breaking even because it's something that you're doing, your strategy actually makes money, but you're not being consistent with it, then I would say understand, where is that breakdown in terms of your approach? Is it the entry? Is it the trade management? Is it the exit? Right? You need to understand what's stopping you from matching and developing the consistency that your plan is showing you is possible to achieve. Once you get clarity on exactly where you're deviating from your plan, then you can start to develop specific things to work on that specific area. But without truly understanding what's stopping you from being break even, whether it's an emotion, a thought process, a lack of an edge, it's very difficult to give you a precise answer, and I don't really like to talk in general terms. So I hope that answers your question in some way. All right, I'm going to take a few more questions. And I think we only have a few more left in the chat. A few more questions, and then we will move on to the giveaway. I have 3 $10,000 challenges to give away live on today's call, courtesy of ThinkCapital. Umo says, what's your risk per trade and how do you decide position size? So, Umo, this is one that I think is very, very personal, right? I say this because I don't believe that there is a generic amount of risk per trade that works for everybody. I think finding the right risk is a blend of 3 things. The first one, and this is the one that probably most people focus on, it's your account balance, right? People tend to take a fixed percentage of their account balance, and that becomes their risk per trade, right? So most people follow the guidelines of 1 to 2% risk per trade, and that's what they kind of stick with in the long run. Now, this is an important way to look at things, especially in the prop firm space. You need to understand what your drawdown limitations are. So understanding exactly what you're risking in terms of your account balance is important, but it's one factor in my opinion. The second one is your strategy, right? If we had 2 people and each of them had a strategy which produced a different win rate, I would argue that the person that had the higher win rate, you could make an argument to say that in order to maximize that higher win rate, they are better off risking a little bit more per trade than the person that has a lower win rate. For example, if somebody turned around and said, here is data over the last 1,000 trades, I have a 70% win rate, I would say that actually you're in a far better position to be risking, for example, 2% per trade than the other person who has only a 25% win rate, right? Your win rate is going to correlate to a certain string of losing trades at some point in a row. And if you're taking those losing trades with risk that your strategy can't handle or psychologically you can't handle, you're going to struggle to recover from that drawdown. So that's the second factor. So you've got account balance and you've got strategy. The third one is your risk appetite as a person, right? Your risk tolerance says, I'm comfortable risking X amount of money. $100 to me and $100 to you could mean completely different things, right? You might be very, very comfortable risking $100. I might be completely fearful of it. There might be somebody else in the world where maybe I'm comfortable risking $1,000 or $5,000, but to them, it would be the end of the world if they lost that per trade. So for me, thinking in percentages is effective up until a certain point. But if you're not truly comfortable with the money that's at risk, you're never going to be able to remain consistent. So my advice is, if you're trying to work out the right position size, figure out the blend of those 3 areas: the account balance, the strategy in how you're using it and what your relative win rate is. And then thirdly, your personal risk tolerance in terms of capital. When you find a blend or an overlap between those 3 areas, I think you'll find the answers that you're looking for. I hope that answers your question, Umo. Justy says, great live session. Thank you so much. This live stream, you and I need, I hope this prop firm will save this video. I'll be back time by time. Haydar, yes, it will be available on YouTube for you guys to watch back at any point in time. I hope that's been helpful. Okay, I think I have answered all of the questions so far on for the Q&A portion of today. The last thing I would love to address with you guys is the part that I'm sure many of you are waiting for. We're going to do a giveaway on today's call in and of itself, right? Now, what we're going to do for today's giveaway, I'm going to pick 3 people that are going to win this challenge. What I would like for you guys to do, for each of you that are watching this live, I would like for you to put a comment with the biggest takeaway that you have learned from today's lesson. What's the one thing that you're taking away that you're going to apply to your trading to help transform or improve your performance in the markets? I want you to leave it as a comment in the live chat, and we're going to be looking at, and I'll be picking some of the best answers or the ones that stood out as people to win the giveaway for today. So I'm going to give you guys probably 1 or 2 minutes. If you want the opportunity to win a $10,000 account, challenge account from ThinkCapital, put in the live chat your your biggest lesson and takeaway from today's session. Again, I'm going to give you guys a couple of minutes to do this, and then I'm going to be picking 3 winners for today. And then we'll be winding down today's session. Okay, I can see you guys getting those comments in. It's great to see. Justy, spamming your answer over and over again is probably not going to improve your chances. I'm going to take into account all of this going forward. Okay, so we've got some really good answers coming through at the moment. I'm enjoying reading these back. Justy's put managing expectations and identify what triggers and causes to my emotions. Umo, nice and simple, get a journal. I mean, very, very powerful. Vapav, my biggest takeaway is about my ADHD. You told me to write down stuff that helps mentally and things about risk management. Michelle says, breathe and step away. I like that. Umo says, know that I have the power within my mind to control. Very, very important. Rebecca says, my biggest takeaway is actually that my strategy is fine. My emotional regulation is key. I've actually started doing the format that you have recommended, and I've been on a winning streak. That's awesome to hear. Nice. Okay. Right. I'm going to be going through and I'm going to be picking out 3 names. And I'm going to announce them on today's call. If I announce your name on here, that is your cue to go into the Discord and speak to Andre, who is going to help you to claim your challenge. So to shoot them a DM. Okay, right. The 3 names that I am going to go for. Let me pick them out. And okay. I'm picking 3 of them that stood out for me, that I think are great takeaways from today. Okay, so our first winner of the challenge account for today is Umo James. Umo James is our first winner for today. Congratulations, Umo James. Head over to the Discord, send Andre a DM, and they will be getting in touch and helping you to claim that account. Our second winner for today, I'm going to be picking, where was it? Babusi Balopi. Babusi Balopi, right? Babusi Balopi is our second winner for today. And our third and final winner of a 10K challenge account is going to be Justy Cinema, right? Justy Cinema. Those were our 3 winners for today. Umo James, Babusi Balopi, and Justy Cinema. I'm hoping I'm pronounced all those names correctly. Please forgive me if I haven't. But I'm hoping you guys have all understood that. These sessions are all recorded, so everything is going to be documented. But if I did announce one of those three names, congratulations, guys. Make sure you head over to the Discord and drop Andre a DM in order to claim your challenge account. That is all for today, ladies and gentlemen. Thank you all so much for your time. Thank you all for your energy, your questions, your feedback throughout the entirety of today's session. It's been a pleasure hosting for you guys again. And we will be doing this again next week with a new topic. And we're going to be having more raw conversations of what we are liking to call here off the charts. Thank you so much for tuning in. I hope you have an amazing day ahead. I hope you have a disciplined trading week as well. And I will be speaking to you again very, very soon. Thank you guys so much. Take care.